Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock. For more videos on Sofi Technologies, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. In this video, we will be analyzing 3 Sofi stock articles. The first one we will be performing analysis on is titled, "Why is Sofi stock up today?" After we go over the great news that Sofi stock actually has received, which could cause the Sofi share price to increase, we will move on and talk about how Sofi has recently issued out a survey which reports 85% of investors actually plan to change how they invest in 2023, referring to both the companies in which they used to invest and their investing strategy. So we'll be going over the results of that survey as well. And then lastly, we will be going over how high the stock price could go if Sofi Technologies is still a solid company to invest into, and what we can expect throughout the year of 2023 for this particular stock and business. For more information on Sofi Technologies, remember to go and smash that like button, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into it. Sofi Technologies, as you probably know, is a fintech company or a financial technology company that operates as a digital bank. Recently, the Sofi share price has increased to where they are in the green slightly, right now being worth around $5.10 per share. And the reason why the Sofi share price increased to $5.10 per share is because 3 main pieces of news were released in regards to the company, which were pretty positive. The first one is that the Biden administration has recently proposed a student loan repayment plan that could cut costs for students by as much as 50% in some instances. Now, the reason why this is actually good news and not bad news for Sofi Technologies is because this technically makes higher education cheaper, which means that people now could technically afford higher education. So if you have your bachelor's, you could go back for your master's, and if you have a master's, you could go back for a PhD, thus getting more debt but at a cheaper price. You're going to have to refinance that debt eventually with a third party such as Sofi Technologies to get a good interest rate on your student loans. So overall, this can be looked as a positive catalyst for Sofi Technologies. Also, even though this particular plan from the Biden administration has not gone through as of right now, technically it could be implemented as soon as July 1st, but nothing is set in stone as of right now. We don't even know if this will be officially enacted. On top of that, Sofi Technologies has recently disclosed that it plans to release their full year fourth quarter earnings results for the entire year of 2022 as well as the fourth quarter on January 30th. So please tune in to this channel and I will be dissecting and analyzing their particular earnings report for the entire year of 2022 as well as their fourth quarter results, which could allow us to adjust some projections going forward on what we could anticipate for this company in 2023. But let me give you a quick preview. For the quarter 4 results, analysts are currently forecasting that they're going to bring in revenue of around $426.03 million, which would equate to a 52.2% year-over-year increase, which is absolutely amazing. That year-over-year increase, or their CAGR, also known as a compounding annual growth rate, of above 30% all the way to 52.2% indicates that this company is rapidly developing. They also anticipate to release their earnings per share, also known as EPS, which is expected to come in for the fourth quarter at a 9-cent loss compared to a 15-cent loss for an entire year ago. So again, this company is rapidly improving in both their revenue and their earnings per share. For the full year estimates, they're anticipated to bring in $1.53 billion, and their earnings per share is set to come in at a loss of 43 cents. However, projections for 2023, analysts are currently expecting them to bring in $2.03 billion and earnings per share loss of just 26 cents. So clearly they are increasing their revenue from 1.53 billion to 2.03 billion, and they are lowering their loss per share in terms of their earnings per share from a loss loss of 43 cents down to just 26 cents. This means that the current projections for profitability at the end of 2024 are still completely intact. Lastly, the third bit of news is that a Seeking Alpha contributor that we have analyzed multiple times and who has commented on this channel a plethora of times is Christopher Hoger, who recently released an interview with the CFO of Sofi Technologies. And of course, Christopher gave his own thoughts on the interview. They mainly discussed about stock-based compensation for the company and how it's a significant expense for Sofi Technologies. It's so significant that just during the third quarter, Sofi actually reported a net loss of around $74.2 million, while their stock-based compensation expense was around $77.9 billion for that quarter, which means that technically, all else being held equal, if they completely nixed their stock-based compensation, they could have been profitable in quarter 3 without it. However, just like with Palantir Technologies, stock-based compensation is used to attract very good talent, and it also drives overall performance within the company. So it's somewhat of a necessary evil that the company is going through right now, but eventually the company is set to become profitable. So I appreciate Christopher Hoger's interview. That is posted over on Seeking Alpha, and I would encourage you to go and check that interview out if you want a more in-depth look. They also talked about a few other things, but overall I think the conversation around stock-based compensation was the most important in my personal view. Up next, we have Sofi Technologies issuing a report that reveals that 75% of investors want to change how they invest in 2023. Right now, the Sofi share price, like we said earlier, is trading at $5.10, while professionals think the company could surge anywhere from $7.18 to $7.33, while the more bullish analysts and professionals believe the company could surge up to $10 during the year of 2023. According to Sofi Technologies' survey, 3 out of 4 investors actually regret how they invested during 2022. So Sofi Technologies surveyed around 1,000 investors in the United States and how they managed their portfolios, and they also asked them questions regarding what they think and what they predict about the stock market in 2023 regarding what could happen. In 2022, it was a rough ride for multiple investors, particularly newer investors who don't really know what's going on. I can only imagine the fear or uncertainty that is surging through their head, considering that they haven't been through volatile markets before in the past, and they really don't know what to do with their portfolio to build a solid foundation to weather against these macroeconomic headwinds. Apparently, 93% reported that they continued to invest despite the environment. When the overall stock market is going downwards, you want to invest into very solid ETFs, index funds, or mutual funds, in my personal opinion. And of course, the two I always push would either be VOO, or you could invest into ticker symbol VTI. These are both ETFs that are very solid, particularly if you're a beginner. And many investing professionals would actually advocate for you to take one of these ETFs and have it make up between 50 to 80% of your portfolio so you have a strong foundation. However, this clearly depends on your risk tolerance, your investing strategy, your age, and a plethora of other factors. 18% of the people that took the survey were not buying cryptocurrencies at these lower prices. 16% were not buying stocks when the stock market started to decline, and they only buy it on stock market increases and uptrends, which is somewhat dangerous. And around 15% of the investors did not sell stock before the market started to decline. One of the biggest challenges for the economy in 2022 was clearly very high inflation rates and increasing interest rates, which we are experiencing right now. However, clearly investors were divided on the various strategies, and the majority of people actually regret their investing strategy. In fact, 39% of respondents said they wanted to invest more despite inflation, and that's clearly what I believe. I invest very heavily while the stock market is decreasing because I know I'm getting a better deal than when it was trading at all-time highs. Another 33% said inflation made them want to leave their investments alone. Also, not too bad of a strategy, but again, by investing into a falling stock market, as long as you are investing into something that's very solid, then that's going to pay off in the long run. run, but again, not too bad. And then 28% said inflation made them want to invest less or sell their overall investments, which clearly that would be more newer investors who are not used to this type of volatility. They entered while the stock market was going up in a gigantic bull market, but they really don't know how to react in a bear market environment. According to the survey findings, almost half the people who were surveyed, around 41%, actually went to their hobbies to take their mind off of their investments. Another 31% completely stopped checking their overall balances, and for me personally, I don't check my balances at all. I dollar cost average into very safe ETFs such as VOO and VTI, or either or. There are some overlap there, so I would suggest just picking one of those. And I honestly don't pay attention to my overall balance because historically, the stock market has bounced back 100% of the time over a long enough period. And the remaining investors just decided to stay the course and keep investing. And again, I would gravitate more toward that strategy. So if we consider all the ups and downs throughout 2022, it's no surprise that the majority of investors reported wanting to make a change during 2023. 21% said they wanted to increase their overall investments, another 19% said that they wanted to conduct more research on their investments, and another 14% wants to work with a financial advisor, and all of these three things are absolutely phenomenal to do. Other key findings in the survey were that investors are flocking more toward non-investments amid volatility in the overall stock market. Men continue to outinvest women overall, and market volatility led to some investors making impulsive portfolio changes, and clearly we would want to stay away from that. I saw a lot of people investing into very hyped companies, and now those companies have clearly slumped due to the overall market, and these people have quote-unquote lost money, even though technically they didn't lose anything if they didn't liquidate, and if they were practicing proper risk management, they would know, at least that I advocate, not to invest more than a 5% initial allocation to any singular growth company, because beyond that would be improper risk management. There are so many phenomenal stocks out there, and even if you follow this risk management policy of a 5% initial allocation, that would only allow you to invest into around 20 companies, where in my personal portfolio, I own hundreds of phenomenal companies because I own index funds, mutual funds, and various ETFs, as well as my favorite singular stocks. But overall, what does this tell us about Sofi Technologies in particular? So many investors and professionals actually think that Sofi Technologies is due for a rebound. That's why this author is bullish on Sofi Technologies, because eventually he understands that the monetary policy that the Federal Reserve is going through right now to get inflation under control will eventually turn around and cause a turnaround in the overall stock market and share prices of very good companies, which could drive a huge increase for the Sofi stock price. Investors right now hope that 2023 will be a lucrative year for Sofi Technologies, but again, until the overall macroeconomic environment becomes palatable, I don't anticipate that this stock will surge. But despite that, what are professionals saying? Well, professionals are actually saying, according to Wall Street, that Sofi is a moderate buying opportunity right now, with 7 buy ratings and 4 hold ratings, and no sell ratings among the professionals that were surveyed. This currently implies an average price target of $7.17, which is above the current share price of around $5.10. However, if we take the middle price target instead of the average price target among professionals, we get that $7.33 price target. But again, still it's higher than the share's current price, and these are 12-month stock price targets, so clearly Sofi Technologies could make investors money in 2023. However, I am betting more toward the end of 2024 once this company becomes profitable. So the author of this article says, feel free to consider a long-term position that's appropriate for your overall account size by investing into Sofi Technologies. Again, I would advocate not more than a 5% initial allocation for this company, and if you initially invested over a 5% allocation into this company, then you might have overexposed yourself to a company that is not set to pay you back for the next year or two. However, overall, things are looking better for Sofi Technologies once again, and I hope that the macroeconomic environment can recover so Sofi Technologies can rebound. With that being said, I would love to hear your thoughts down below. Remember to go and smash that like button right now, subscribe if you are new, and I will see you in the next YT video.